Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell for Thursday, March 31st. It is 6:41 in the morning as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures, really the only thing of note that I see is oil down around 6%. That comes on the heels of the administration talking about releasing 1 million barrels a day from the strategic petroleum reserves. So that's got the market nervous. And don't forget, it wasn't on the calendar, but there's an OPEC meeting today. I'm not sure the timing on that, but I know there is a meeting. So that may set up for a more volatile session on oil. And another thing, just rolling into the macro, remember today is the end of Q1. So what I'm going to be looking for today is keeping an eye on oil-related names, commodity materials-related names, because on this rebalancing for Q1, there may be some hedge funds out there that want to get more exposure or at least get some exposure to the energy sector. And if oil is down 6%, I'm going to be watching for red to green, open red and transition to green today, because they may take that opportunity to either increase their exposure or establish exposure today before the end of the quarter. So I'm going to be watching that real close. And keep in mind that on the other occasions of releases of the SPR, remember they did a 30 million barrel release, and they've done a 60 million barrel release, hasn't done a thing. There's been there's an initial reaction like we see this morning, but then it doesn't stick. So be watching that today. We've also got jobless claims, Chicago PMI. We've got the personal income and outlay this morning. That'll be really important. And we've got, of course, the nat gas inventories at 10:30. I didn't see anything that caught my eye on earnings today, but you can look on the calendar on the blog site for any names of particular interest. The one thing I will tell you is that the UiPath, the company ticker PATH, was down 25% after hours last night after they printed their earnings. So that's going to set up really well for a bracket trade if you're into that kind of thing. You can, if you like trading same day volatility, you're welcome to do that. I'm more of a second day setup type of player. So I'm going to set that thing up as a bracket trade at the end of the day and see where the gap will be. And then that can be something that we can trade Friday and into Monday. And now that I'm talking about it, my plan for today is to more or less take it easy on new positions and kind of just see how the quarter ends. There may be some volatility today. Also, we have been saying for at least the last couple of weeks that we expected the market to stay relatively strong in this rally, at least until today, so that those quarterly statements can go out with as rosy a picture as possible. And now, after April 1st, kind of all bets are off. One thing I did note, and I put the little chart on the blog this morning, is we've got a huge number of companies with buybacks that are going to be going into a blackout period prior to their earnings. So there's not going to be that natural or buyback bidder under the market. So there could be some extra volatility here coming into April as, number one, the quarter rolls off. Number two, the buybacks are not going to be there as prevalent as they have been due to that blackout period. So that's something to be aware of. There's some other good market insights on the blog site this morning, so make sure you check that out. I mean, not a lot happened yesterday. We'll run through the charts and update the pivots, but not a lot of any consequence happened yesterday. Here we've got the SPY daily. We're kind of right here in the middle in no man's land between 464, let's call it, and 456. Kind of tough to take a position right here. I mean, if you've been long, you can stay long, but as far as jumping in on any kind of a new swing, I think you got to wait to see whether the rally can proceed and we're going to just blast off in the new highs, or if it kind of hesitates or rolls over here. There was an attempt yesterday to come down and fill this little gap. I show it just shy of that. I have the bottom of the gap at 455, so be aware of that. And then we've got the top over here at 462 and a half. Here's that little gap. We did, just oscillations yesterday. I mean, if you're sharp and you're on the ball and you like trading that volatility, there were certainly a few trades to make, but nothing too big. As far as levels this morning, I would put a line on your chart at 455. I don't have it drawn in here. I should have done that, but you've got a trend line right here. You can see that going up through here. And if price were to roll over today and lose that 455 area, I think you're going to come down to 453 pretty quickly. And really the next big volume over price bar is right here, and that would let price fall all the way down towards 450 or even 448. So have those levels detailed on your chart. Qs, same thing, no change in the pivots on the daily chart. I would be using this 367 area. We've got the top of the gap right here. I show that not being filled, but not really much of a gap there to speak of. We do have an upper gap up here between 375 and 380 to be aware of if we get a burst today. A final window dressing blast off. Be ready for that and be ready for when and if you want to trade that. So for instance, if we open down here or recapture that 370, that would be a good place to be long for sure on a breakout. You could see price go all the way up to 375 and possibly even into that gap if there's some kind of Q1 finishing flurry. That would be a good one to capture. On the downside, here's that trend line I was talking about that on SPY that I should have drawn in here. I have it drawn in here on the Qs. If we were to lose 366 here this morning, you can see that there's pretty decent sized void below that. You really don't have a big volume over price bar coming in till around 357. I would have that area highlighted on your chart, and if we start rolling downhill, there's not a lot to stop it from going all the way down here to 357. So be aware of that. IWM, we broke out of this big consolidation area. We went up on Tuesday to the bottom of this gap, and then yesterday we fell back down. And one of the things that I've been I was very surprised about is the ease at which price went through this 210 area, which remember is the key resistance area that goes back over a year. I would have bet almost anything that there would have been a reaction at this level. And then remember, from the daily chart, we've got the 200 coming in between the gap and that 210 area around 211. It went right through that as well. And I was like saying, God, to go through 210, then go through the 200 with seeming ease, I was surprised at. But now we're back down below. So just remember those technical analysis tenets. It's not much of one, but that would qualify as a bull trap, right? You break in from below into a well-defined area above 210. That should have got a lot of people long, and then they reversed it yesterday. And so I would be watching this 208 really carefully today, because there again, we've got a large, well-defined trading range below. And so we would have broken out, failed, and now we've come back to the top of this trading range. You start getting down into the 207s and 206s, then you got to start looking towards the downside on IWM. Again, here is a trend line for you for visual reference on the 30-minute chart. Comes in right at 207. You lose 207. I mean, it's not a lot, but you're going to come right back down to 206, and then you're going to be on the wrong side of the trend line. And if it were to lose 206 here today or at any point in the future, then you're going to come down to 203 very, very quickly. So that would be a nice trade to take advantage of if you want to get involved and you're able to do that. So I would be setting an alarm at 207 and one at 206 for sure on the downside. Now on the upside, if we come up and break 208 from below, then that would open the door back up to 210 on the upside. Before we get into Fatman, I want to welcome any new visitors to the YouTube channel. Really appreciate your time this morning. What I do each and every day is do my best to set you up with objective trading levels that you can trust and rely on, and with the aim of you focusing all your attention on executing around those levels. That's where you're going to get paid. That's where you're going to grow as a trader, working on your execution. Every trader has to cross that journey himself. But if I can give you some good coaching, if I can give you some good market cues and some accurate levels, that'll hopefully get you down that road faster once you gain some trust in the levels that I give you. So if that sounds good to you, please hit the subscribe button and the alarm bell. Then jump over in the show notes and you'll find a link to the blog site where you can drop in your email address, register for all my content, then morning, noon, or night, you will get anything that I send out right in your email box. That would be great. And you'll also get an invite to our trading room, where it would be nice to meet you and the rest of the traders as well. So, and of course, longtime listeners, thank you so much for supporting me and sticking with me. I appreciate that. Facebook didn't do a lot yesterday. I think 230 is your pivot on the upside. On the downside, we've got a level here at 226 you want to be aware of. There's an open gap below, and then you can see where the larger support lies down below, down towards 222, 220 on the downside. You would certainly want that to hold on any kind of a pullback move. Apple, again, didn't do anything yesterday. Got an upper pivot at 179, and here you've got the little gap that's yet to fill at about 176.50. So those are the areas that I would be looking at this morning to either get long on a gap fill that holds and then look for a move back up to 179, or if they take it green right out of the gate, you can get long on a break above 179. And, if they can do that, you got basically a free run up to the prior highs at 182.50. So I would definitely have an alarm there at 179 on a breakout above, because there's not a lot really stopping it from going up to that all-time high. That would be a nice $3.50 trade if you can catch that one. More or less consolidation day for Tesla yesterday. I think your pivot remains 1100, just as it was yesterday. I'll show you where that level comes from. That is the midpoint of this $200 trading range. If you get a breakout and hold above 1100 on Tesla, you can see the void that opens up on the chart. I think you get a breakout and hold above 1100. I think you got a legitimate shot at making a run to 1200. Number one, we re-entered the old trading range at 1000. So your target becomes the opposite side of the box, which is 1200. And now it's very common to get a hesitation at the midpoint of that box. And again, look to the left for the volume over price profile. You can see all the trading was done in the lower half of the box. So right now we're at resistance, and with that void above, I think if you can get above 1100, it might find 1200 pretty quickly. Microsoft, I think you want your alarm at 315. If you can break above there, I think you got a shot to 321. If price falls below 311, I think it could come down here towards 305 if things kind of fall apart. Looks good right now. I would have 315 alarmed for a topside breakout to 321. Amazon, really did a breakout in a back test here to 33.20. I think as long as it holds that this morning, you've got a pretty nice entry right there for a move higher. But if not, probably going to come back to that 200 line at 32.27. Google didn't do anything yesterday. $11 on a $2,800 stock is just oscillation, more or less. Looks just like the Amazon chart in the sense that had this little move higher and then came back to retest this breakout. So 2840 is your pivot this morning. I would want to see that hold. Why? Well, if it doesn't hold, you're probably going to come back into this 2790 area, I would imagine. Netflix had the little breakout, then came back. Looks pretty clear. 380 is your pivot with some overhead resistance here around 387 to 390. If it can break above that, I think you can get to 400 and then potentially up to 410. Let's look at the daily real quick. I've got an alarm set on Netflix right here at the 50, and that comes in at 408. I've got 410 alarmed. Maybe I'll tweak that a little. But I think if it can get past this big volume over price bar and recapture the 50 from below, that's a trade I want to make, because then you're moving into a big void with a run up to 460 at the bottom of this big gap, and then with any luck get a breakout there, come up to 500, back test the falling 200 right here, and then I think that would be a really, really nice risk reward trade if you could get something at 410. Basically give yourself $10 or $15 on the downside for the potential of 90 on the upside. I like that trade a lot. SMH kind of wobbled yesterday down here at the bottom of this channel and at support at 276. I think that's your pivot today. I wouldn't want to see price go any lower because you've got a little void in the chart, and you can see your big support area is back at that 270 pivot that we used the other day. So I think it's going to be important for semis to hold in there today and hold above 276. XRT had a rough day at the office yesterday, off 4.5% with the market doing basically nothing. You can see here there was that big move on Tuesday and then gave it all up. I would have this 77, 76 and a half alarmed for a potential break below. That would be a short that I would be interested in putting on. And just wrap up with a couple of slides. This Lithium Americas, a lot of us are in, had a nice explosive move yesterday, up 12%. I mean, it was up 14, 15% before it pulled back. What I did on into the close yesterday, if you'll remember, we were in the April 35s. What I did is I rolled up to the 3750s on Lithium America. So basically rolling and protecting there. And that would be something I would, as you're looking at your stuff, if you're in it, with this market being as crazy as it's been, I've been reluctant to just sit on, paper profits. So I've been kind of pressing that idea of rolling higher, scraping off the profits, and then going, a strike higher and, taking the gains to the bank and then see what happens. But from a technical standpoint, really nothing in the way of stopping this to come back up towards the 40, 41 area to touch that prior high. Now, if you're not in it and you see, one of those bad days at the office where it comes back into 34, 35, back in here to back touch the rising 8 EMA, I think that would be a nice entry for you on Lithium Americas. And if you go into the chart list, and this is in the materials group, and the subgroup is non-ferrous metals. There you'll get the lithium, uranium names. You'll get Freeport, FCX. You'll get Southern Copper. There's a bunch of you'll get MP Materials, which is the next one, the rare earth metals. So lot of bullish looking charts in that sector. Now, yesterday, well, this has been a dynamic week for MP. Last week, I think it was last week, let's see. Yeah, last Friday, we got this explosive move up. We were sitting in the April 50s. We got that big move last week, and we closed out the 50s and got, no, we were in the 55s. I beg your pardon. We were in the 55s, and when we got that move, we rolled higher to the 60s. And then yesterday, we went right up there, but then they faded a lot of that move. So I wasn't fast enough to, get out of it. So I am still in the April 55s on MP Materials. But there again, I would tell you, if you're not in it and you see some kind of weakness to get a pullback into the 8-day or even backtest the breakout at 50, I think that would be a really nice entry for you. So you could alarm that and then see if you get fortunate and get that backtest and get yourself a nice entry on MP Materials. So let's wrap up with a little recap. Oil's down sharply on the news about this potential SPR release. Last day of the quarter, could be some rebalancing volatility today. Watch, not only because of the OPEC meeting, but any hedge funds that want to increase their exposure to energy and materials might use the weakness in oil this morning to buy on weakness some of those oil servicing names, drillers, that kind of thing. So watch for red to green on those type of names. And if you want to bump your exposure to oil, today might be a good day to do it. Also, don't forget to mark Path. I think Kathy Wood's still in that name. But anyways, there's going to be a big gap to fill on Path going forward. So that'll be a bracket trade that we can get involved in tomorrow and into next week. So let's wrap it up there. Hope you enjoyed the video. Hope you got something out of it. And I hope you finished the quarter strong today. Let's see how it goes. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.